Don't buy a house. No, really. Don't buy a house unless you're financially prepared and in a position where you and your family can comfortably afford the payments. That's the honest truth. Now, this isn't some type of sales tactic or reverse psychology. I'm an agent who runs a small real estate team that includes just my wife and I, and we're honestly here to give you the reality of home ownership. If you're gonna buy a home, buy for reasons that make sense for you. That could be like an addition to your family or no longer wanting to rent. Maybe you're relocating to San Antonio for the affordability, or you simply want a permanent place to live without the uncertainty of rent increases or lease terminations. Now, the other reason I'm recording this video is because of this question I came across on Reddit that asks, should you buy a house as soon as you can afford one? Now, this comment says, I'm 27, I see a lot of social media posts lately bashing home life, maintenance costs, and glorifying high-rise apartments and maintenance-free living. If you own a home or have any input, would you buy a home as soon as you can afford one, including all maintenance, upkeep, or wait later in life? Now, this is a really great question, but I want to be able to really provide you some context to this answer. So in this video, we're going to dive into the numbers of what it could look like when buying a home that is, for example, $300,000. Now, for the sake of numbers and for the example, we're going to use round numbers and say that there's a home that is $300,000. So let's break down the numbers and see what it'll take and cost you to afford a home for this price. Now, just a disclaimer here, I'm not a lender, I'm a real estate agent, so we're gonna go over some basic numbers as it pertains to a $300,000 home. So let's jump into the numbers. Okay, so for the sake of the example, as I mentioned, we're gonna be working with a home with a price of $300,000. So now that we have the cost of our home, the first thing that we want to consider is going to be our down payment. Now, there's going to be different options on what a down payment could cost you, depending on what loan you're going to go with. Now, there's conventional, there's if you're a investor, it could be 20%, but for the sake of the example, we're going to say that we're working with a FHA loan. And for an FHA loan, the minimum down payment is going to be 3.5%. Now, the math on 3.5% from a $300,000 home is going to be $10,500. Okay, so now that we have our down payment, the next thing that we want to consider is going to be what our loan amount comes out to be now having put our down payment. So what we're going to do is take the $300,000 minus $10,500, which ends up coming out to be $289,500. All right, so we have our loan amount, which is what we're going to get as far as lending is concerned. We're going to go based off this price. And so the next thing we want to consider is going to be what our interest rate is going to cost us, or is going to be rather. Now, the interest rate, for the sake of the example, I'm going to use a 6.5%. Now, the reason why I want to do this is because when it comes to new construction home, they have different incentives that could get you at about 4.9%, which is what I'm currently working with some clients on a new construction home. Now, that's going to be dependent on different builders. Now, when it comes to resale homes, you may want to think about what your interest rate is going to be on a resale home. So the average interest rate right now at the time of this video is a 7.08% interest rate on a 30-year fixed. So I would say on average, hopefully we have some drop in interest rates and the Fed cuts rates a few times in the next few meetings. So let's say we're working with a 6.5% interest rate, which is where I get that from, right? Now, this is purely an example, and for the sake of the example here on this video, we're working with a 6.5% interest rate. Now, based on the 6.5% interest rate and based on the loan amount, just with these few numbers that we have at the moment, principal and interest, our price for this home is going to be roughly $1,830 for this example, and principal and interest only. We still have to consider what our property taxes are going to be. Now, those are going to range from different neighborhoods to different locations here within San Antonio. And it may not just be San Antonio. It may be anywhere that you're currently watching this for. where you want to purchase a home, property taxes are going to be different in different areas. And so the other thing that we're going to want to consider is going to be our homeowner's insurance, which ranges as well. And the other thing that we're going to want to consider is going to be our private mortgage insurance, or MIP, same thing, it's one and the same, a private mortgage insurance or mortgage insurance premium, right? So that's going to be on a conventional loan as well as an FHA loan. Like I said, for the sake of this example, we're going to be using a FHA loan and we're going to have PMI. I'm going to talk about that later when we get to that point here in the video. So give us a second and we will get there and talk about what PMI really is. So the first thing we can take into consideration is going to be the property taxes. Now, property taxes here in San Antonio range. I've seen them from 1.8 to about 2.7. It just depends, like I said, on what area you're at within the city you're looking for. But for the sake of this example, we're going to be using a 2% property tax rate, which if you do 2% based on the loan amount for the year, you're looking at $6,000 of property tax, $6,000 worth of property taxes for the year. Now, 12 months in the year divided by 6,000, that's going to turn out to be $500. Now, the $500 is going to be added to this principal and interest. So we're going to do that here momentarily. But the next thing we're going to move into is going to be homeowners insurance. Now, like I said, this ranges, and I know I'm not the lender here, but we can say for this example, it's going to be about $100 to roughly $150, and it could be less. It just depends on who you're getting your homeowner's insurance from. Now, I've seen it as low as $50, but it depends on what's accounting for that type of insurance and what does that insurance cover you. So on average, like I said, I see about 100 to 150. So let's cut it down the middle and say that this homeowner's insurance is going to be worth $125, right? We'll split that down the middle. And the next thing is going to be private mortgage insurance. Now, like I said, it can be used on a conventional loan or FHA loan. All this really means is that wherever you're getting your lending from, they're going to want to insure the amount of money that they're lending you. So ultimately what it is insurance for that mortgage. Should something happen, at least the individual or the entity that loaned you the money has insurance for that amount of a mortgage, right? So going back to the board here, for that, it's going to be about 0.5% to about 1%. Sometimes that changes to about 1.5%. So for the sake of this video, we're going to cut it down. That in the middle and we're going to choose 0.75%. Now, 0.75% for the year, that turns out to be $2,171.25. Now, monthly, if you divide that by 12 months, you're looking at $180.94 monthly. Okay, so now that we have our variables, we're going to want to add $1,830. We're going to want to add $500 to that for property taxes on top of the principal and interest. Then we're going to want to move over to the homeowner's insurance, add that of $125, and move into private mortgage insurance of $180.94. Now, once you add all four of these numbers, the total cost for a mortgage payment monthly comes out to be $2,635.94. That's based on a $300,000 home with all these variables included. Now, like I mentioned, I'm not the lender. I'm not the lender. They're going to be the ones to do the calculations for you. They're going to be the ones to really get you the numbers that you're looking for. And all these numbers are going to be dependent on what you're actually able to be approved for going through a lender. right? It's going to be based on your annual income. It's going to be based on your debt to income ratio, what interest rate you're going to get based on whether or not you're going to go with a new construction home or a resale home. The lender is going to be able to give you these rock solid numbers of what you can go on, because all these numbers are situational based upon the individual or family that's going to be applying for this loan. So guys, this is a short video, but I wanted to really come to you to the table and give you an overall view of what it takes to afford a $300,000 home. So I hope you got value from this video. If you have any questions about anything on this video, feel free to reach out or leave a comment down below on your thoughts on this video. And if you want more videos like this, feel free to subscribe to the channel and hit that bell for notifications. That way you can see more videos like this. And if you're looking to relocate to San Antonio, Alyssa and I would love to assist you in any way we can and just be a resource of information for you. So feel free to reach out to us with the information on the screen with a phone call, text, or email, and we would love to help. Hope you like this video. Hope you have a great week, and I'll see you on the next one.